Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe, and also make sure you check out my website. I have three brand new trading courses: a option course, a market profile course, and also a Fibonacci, about 5.5 hours worth of videos. Only $50, and if you buy them, you also get the S&P Emini futures weekly trade zones for free. All that for a lifetime subscription, one-time payment of only $50. But as always, let's jump right into it. In today's video, we're actually going to talk about how to do a bull call spread, right? So what we're going to do is we're going to walk through how to do a bull call spread, the way to analyze a chart, okay? How to enter it, how to figure out time, things like that, and place the trade. So we're going to do a step-by-step with this. Okay, so the first thing is let's find a stock. Let's say we're bullish, okay? And we're just going to say for right now, we're looking at Apple. And I'm actually bullish on Apple. I actually think we're going to get all the way back up to this 140 level, okay? Now, with that being said, with this 140 level, is when do I think we're going to get back to this level? That's one of the most important things, right? Is when you actually think you're going to get to that level, okay, with options. Because with the stock, I can hold for as long as I want, but with an option, I have to figure out how far out my time frame. So what I'm going to do is let's come over here. We'll go to the trade tab, right? All products. And let's type in Apple. And these are all our dates, right? The different days we could go. I'm going to sit there and I'm going to go, hey, let's look at the June 21. Let's give myself 44 days to be correct on this trade. I'm bullish longer term on Apple. So going back to Apple, hey, yeah, over the next month and a half, could we get back up to this 140? Yes, because maybe we keep pulling back, we go sideways, whatever. Now, normally you want to put a trade on like this when you're at a support level, meaning you could say, hey, I think we're at a support level right here. I really like this. We're in an uptrend. We were in a downtrend, right? But now we're in an uptrend, and this is just a pullback in a bigger move to the upside, right? If I draw a quick Fibonacci retracement, I just did a video on this, right? Look for a potential pullback to get long, looking for a higher high, right? For the trend to keep going higher. So let's say we're bullish right here at these levels. So we want to give ourselves 44 days to be correct. We're going to come over here under spread. We're going to go to vertical, okay? And then we're going to come over here and we're going to go, okay, if we think we're going to get to the 140 level, right? That's our ultimate target. I'll probably want to look at the 135, 140 bull call spread. So what I'm going to do is I'm going to come over here. I'm going to left click the ask side, right? You want to make sure this is green, okay? And what we're going to do is we're going to buy 135 call, and then we're going to sell the June 140 call spread, right? It becomes a perfect hedge. So we're buying one and we're selling the higher one. This whole trade's going to cost us $95, right? To put this trade on. So we're going to click on confirm and send one time, and let's take a look to see what this is, right? We're going to buy one vertical call. Our break even is 135.95. Why is it 135.95? Well, if we're buying the 135 and whatever our debit is, okay, so we're going to pay 95 cents, well, that is added on to the lower call that we're going to buy, right? So 135.95, and then our max profit would be 405. How did we get 405? Well, it's a 5-point wide spread. Subtract 95 cents, what we pay, the premium that we're paying for this. Okay. And that gives us a total of $4.05 worth of maximum profit. Now, we would need price to break well above or be above 140 come expiration to realize the full max profit. Now, think about this. We're using only $95 of actual capital to put this trade on, to trade 130, we'll say $128 stock, right? Which is really good because it's for people who have smaller accounts, right? Maybe their account's under 25 grand, they can't day trade, or they have limited capital, maybe a $5,000 account, a couple thousand. You can now actually trade Apple. You could trade these big cap stocks and have limited risk. And here's the thing, we could be dead wrong, okay, on this trade. So let's go back to the chart real quick. And let's say we put this trade on right back here, okay, on this day right here, okay? And we thought we were going to get back up to 140. Well, guess what? We were dead wrong the entire time, right? The day we would have bought it, wrong, right? Okay, maybe we're up a little bit, wrong, dead wrong. But we had plenty of time to be right, to ride this out. And then all of a sudden, we got the big move late into expiration. Okay, and then you had a high of about 137 at this point. Okay, well, if we got to 137, that spread that we paid $2 for, now $1.95 for, it all depends how much time is left. If there's only a couple days left, dude, that spread is probably worth maybe $1.90, right? But minus our 95. So we might have made 100% on our money. We might have made $95 on that trade, because if there's very little time decay left, then we're in the money, right? On the calls, we're way out of the money on the calls we sold. And so with that trade, we would probably be up about, we'll just call it $1 with a couple days left. Now, if there was still if all of a sudden we take this trade today, and by next week with 44 days, this call is now worth, we'll just say, let's say we're at 138. Okay, all we need to do is come over here and look at what the 125, 130 is, right? Because it'd be the same thing of 135, 140. Okay, what we paid 95 cents for is now going to be worth about $2.70 minus our 95. So if we had a $10 move, we'll actually make about $150. Actually more than $170 on the trade. Not bad at all for a nice risk reward management. So I hope this video helps kind of explain how to trade a bull call spread. And also remember, you can always go look back at what previous prices are, or what current prices are. Like, hey, if we move $10 tomorrow, how much is that going to be worth? We'll just move everything down. If we're at 128 right now, what's the 125.30? Okay, well, if we went to 138, this number would probably look very similar to this number where we are currently at the money. So I hope this video helps. As always, thank you for watching my videos, and until next time, we'll talk to you soon.